Hello guys, I am Krishna Kumar from first MCA. Today we are going to learn about journal book. Let's get into the video.
Good morning. Today we have to learn what is journal book. A journal book is a primary book of original entry in accounting. All business transactions are recorded in a journal in chronological order before being posted to ledger account. Which means all the transactions and all the transaction entries are recorded in a journal book by day order wise. This process is known as a journalism. And each record transaction is called as a journal entry. The journal entry provide a complete systematic record of all transactions. Hence, to ensure the transactions are recorded in both and debit credit aspects, to serve as a basic for posting to the ledgers, which means to record all the transaction in system to avoid the human errors, to ensure that all the transactions are as both the debit and credit aspects, and this help to post a ledger easy. Before starting journal entries, you have to know the golden rules for the accounting. There are three types of accounting. One is personal account, another one is real account, another one nominal account. There are certain rules for debit and credit as well. In personal account, debit the receiver and credit the giver. In real account, debit what comes in, credit what goes out. In nominal account, debit all the expenses and credit all income and gains. Now, let's see example program for journal entry. There are 10 transactions are given. Uh, let's solve the problem. Before going to solve this problem, you have to know the format of journal entry. There are 5 columns in journal entry. First one is date. Second one is a particulars. Third one is a ledger folio. Fourth one is debit. Sixth one is credit. By following this, let's see the solution for this problem. The first transaction, Mr. Arjun started a business with 1 lakh cash. 1 lakh cash. Here there is a two account. One is a cash account, another one is a Arjun account. Here we started a business with 1 lakh. This become a capital for the business. So we have two accounts. We have to write the date when the transaction is held, and second particulars we have to write which two accounts are take place in this transaction. And first is a debit account, which account has a debit side. Second is a credit account. Here the transaction is held using the cash, so we write as a cash is a debit account, and the capital is introduced to the business. The capital is credit to us, so we write as a capital account. Uh, and below we have to write the narration for the transaction for our understanding. Here the narration being capital is introduced in cash, and we have to write the amount in debit side and credit side. It was like the second and transaction on 2nd July, purchased goods for 20,000 in cash. As here we have first we have to write the date. Here we have a two account. One is purchase account and another is a cash account. And so we write the purchase account is the purchase account is a debit for us, and to cash is credit. So we have to write the purchase account declared to cash account. The amount is 20,000 here. The third transaction, purchase goods on credit from Raj Traders for 10,000. In this transaction, and we have mentioned the word credit, which means we bought the goods for credit. Credit, we have to pay it on later. So we have a two account. One account is purchase account is always on debit, and from whom we have purchased the goods, the Raj Traders account. Here to write the Raj Traders account and the amount on the respective columns. Columns. On the fourth transaction, on July 4th, sold goods for 15,000 in cash. Sold 15,000 cash. Here we have a sold goods in cash. We have a cash account and sold goods. Sold goods we have to write as a sales account and cash account. Here cash is debit and sales is on credit. Remember, purchase always on debit and credit. Sales always on credit sides. Here the cash account is on debit and sales account is on credit. 15,000 are respective in their places. Narration are right there. Transaction. Transaction sold goods on credit to Ram for 8,000. And here We have the RAM account. We have to sell the goods for RAM account. So RAM is a debit card. And we have to say on our sales account we sell the product and we are the creditor. So we write that RAM account record to sales account. We have to write to keyword for the next account. The respective amounts are 8,000 on the respective places. Paid office rent 2,000. Here we have paid office rent rupees 2,000. We have a rent account and in this transaction we have a rent account is debit and we have pay the rent using the cash. So we have right rent account record to cash account. Here rent is debit side because we have to pay the rent and the cash is go to the house owner. So the cash is a credit account and the respective amounts are given. The narration is written by being office rent are paid. The next account bought furniture for rupees 5,000 in cash. Here we have a two account, furniture account and cash account. On the above exercises we have written as a purchase. Here also we purchase a goods, but the here this entry we have a name furniture. If any name was given in the purchase account, we have to take the name as a account name. So we have take furniture account and cash account. Yeah, in this entry. So the furniture account is a decor and the cash we have brought the furniture in using cash is a, so cash is a credit side. The respective amounts are given below. On the next account on 8th July 2025. On 8th July, paid the salary to employees rupees 10,000. Here we have paid the salary to the employees. So we have a salary account. We pay the salary as to employee in cash. So we have a cash account also. Cash account also. So this is in the entry. We have to pay the salary. So salary is in debit account, and we have paid the salary using cash account. So cash in credit account. So the amounts are 10,000 below. The next account on July 9th. The July 9th, receive commission rupees 1,500. So we have the receive the commission using cash account. Here we have get the commission using cash account. We get the cash. So we are the creditors. The commission account is in credit side and the cash is a debit side. And the amount is 1,500 on both. On 10th July 2025, the last transaction, withdraw rupees 3,000 from business for personal use. Here we have withdrew rupees 2,000 from the personal use, which means we withdraw 3,000 from our capital. So so in this transaction, we have to write not withdraw account. It has a name drawings account for personal use. When we withdraw cash for personal use, we use a drawings account. We withdraw the cash. So drawings account to cash account. The amount is 3,000 are given below. Oh, the narration is written. This is format and how we solve the journal book. You have to remember the format of the journal book and you have always remember the golden rules of accounting for this account. Thank you for listening. Have a nice day.